Now, Stats SA has just released the first quarter GDP growth numbers. The figures show annualized growth of 4.6% in the 3 months to March 2021. Finance, real estate and business services are cited as the main contributors. Let's now get some reaction on just the announced figures. I'm joined for this by Economist at Standard Chartered in London, Razia Khan. A very good afternoon to you, Ms. Khan. Good to have you with us on the daytime update today. Now, looking at the GDP data for Q1 and South Africa's performance, was this to your expectations? How do you view these numbers?
The one standout for the market is that this was clearly much better than the consensus. We were expecting a reasonably good performance. We are measuring growth in quarter-on-quarter terms. Everyone knows that a lot has changed in the economy, given the impact of COVID. There was a slight reduction to what we had seen in the last quarter of 2020. Nonetheless, broad-based expectations that we would see continued positive momentum measured in quarter-on-quarter terms, and we saw even better than that. That will be the takeaway for the markets today, where everyone will generally be looking at these numbers. Signs of reasonably good momentum across a number of different sectors, and that will be seen as a positive.
Thank you, Ms. Khan. We also have Xolani here who would like to ask you a couple of questions too.
Good afternoon, Razia. South Africa is contending with load shedding and the COVID-19 pandemic currently. What do you foresee as the biggest stumbling blocks to growth for South Africa outside of those two that we know of? There have been talk of structural growth that is not happening in South Africa.
Well, the very interesting thing about the data that has just been released, knee-jerk reaction, this is good, this is better than the consensus, even given the slight revisions to what we had seen last year. But the worrying part of it is that investment, gross fixed capital formation, remains negative. And this means looking forward, we know that there's still a great deal of COVID uncertainty, which the South African economy is experiencing right now. The good news is the containment measures don't impact as much economic activity as was the case last year. So there's still an expectation of growth, but it's growth off a very weak base. Apart from mining, and we did see really robust performance on a quarter-on-quarter annualized basis, there isn't anything in the data that gives us a strong sense of what is going to sustain growth performance beyond this bounce from COVID. So when you look at it in big picture terms, the economy still struggling with some uncertainty. We know that in year-on-year terms, growth is still negative for the South African economy. Yes, there's a normalization of activity as everything reopens. There's the good news from the rest of the world, which is helping to boost the performance of mining. But the question we should be all asking ourselves is, apart from that, what is there to provide the reassurance on future growth? And if anything, this is the worrying part of it. Good news for now, but what firm indication is there, if any, apart from mining, apart from the deeply negative base, that good growth can be sustained?
And that really brings me to my next question, the issue of sustainability and the issue of where to from here. How do you see the outlook in the coming quarters? You've touched on it briefly in your previous answer, but now let's consider the role that the vaccine rollout could potentially play, coupled with COVID-19 related lockdowns. Do you think that will influence the coming quarters much?
In a sense, this is an area of uncertainty. It's an uncertainty that emerging markets across the world are grappling with. We know that in terms of vaccine rollout, what we've seen is very uneven. Developed markets are doing better, have had much faster rollout of vaccines, are reopening faster. And for a lot of emerging markets, there is still the uncertainty. No one can say for sure how much economic activity is or isn't going to be impacted by these third waves of COVID that are now taking root. So to answer the earlier question, we know that electricity is still an issue for South Africa. It will take a while to resolve. There's the uncertainty now What do we have to go on? The good news for South Africa is that global growth is recovering. Developed markets, the uneven nature of it, we know all of these things, but that recovery has helped on the external side. We expect to see further good performance in terms of mining. That in itself does come with some uncertainties. How much is electricity going to be a constraint on future growth? What can we really expect in the coming quarters? Here's an easy projection. Because we're measuring off a base from 2020 that was so deeply negative, we know that the South African economy grows in 2021. That's a given. And chances are, given the Q1 performance we've just seen, it grows more robustly than everyone was thinking initially. But what we really need to be looking at is what are the signals, what do we have to go on to suggest that growth performance can be robust, can be sustained into 2022, into 2023, beyond just this reopening after a severe COVID crisis. And that is the key uncertainty for the South African economy still.
Ms. Razia Khan, thank you very much for your insight and your analysis this afternoon. That's Razia Khan, economist at Standard Chartered in London. Thank you very much for your time, and thank you.